Hi friends, welcome to Konexio Technical Insight. I am Rahul Randeria and I would be conducting today's show. Today we would be discussing regarding the trends, the setups, the technical indicators, the candlestick pattern, the derivative data of Nifty, Bank Nifty, as well as the different asset classes. Now, first of all, uh, last week we have discussed that markets were trading near its multiple support trend line, which was maintained since last 6 months, or maybe to be precise, December 2023. Multiple times, those levels has been defined very well, and we were expecting that market might make some bottom or market is in the process of making a bottom and we might see a technical pullback or a bounce back rally after forming the bottom, and that particularly view uh, turned out to be very in a positive way, and market performed on our expected lines. So definitely the trend is positive as of now, but as we know, this was the current week was an extended week. On Saturday was also a trading day, maybe for 2 hours. So overall trend remains to be at least stable at this juncture, and next week is a truncated week, so we might see some sort of volatility in the markets. So before starting the video, just a general disclaimer: this video is only for education purpose. Please consult your financial advisor before investing and trading. So friends, now let us directly go to the Nifty daily charts and we try to figure out what is the trend or what is the pattern which has been formed by the Nifty on the daily charts. So this is the Nifty daily charts. You can clearly see, and we have been discussing regarding this particular expanding triangle since December 2023, and markets are well positioned or well moving in this particular expanding triangle. So as of now, we can see that it is just about to test its lifetime high, which is 22,770 odd marks. Currently, the Nifty closing on Saturday is around 22,502. But one more thing which I would like to highlight is, since last 5 to 7 trading session, we have seen that Nifty has almost tested this 100-day moving average. It has rallied very smartly, so a small pullback or a cool off cannot be ruled out at this juncture. So looking at this particular daily charts, the market seems to be stable at this juncture. Now you can see this is the weekly charts. Weekly charts, I can consider it is not an exact, but yes, I can consider it is an engulfing bullish candle. Still some sort of upside range was yet to be covered, but you can consider it, yes. The impact of this particular candle would be only highly effective when Nifty crosses last to last week's high, which is 22,590 odd mark on the Nifty spot level. If Nifty closes above 22,590, then we might see Nifty heading towards uh, maybe 23,000 in the maybe 4 to 8 weeks, 4 to 8 coming weeks. So as of now, the chart seems to be positive. Market seems to be stable, and again, looking at the truncated week, because on 20th of May we have a trading holiday. So definitely, profit booking on Tuesday or a cool off cannot be ruled out, but that should be used as a buying opportunity. So friends, now let us discuss the important supports and resistance level in Nifty for the next week. The first support in the Nifty is placed around 22,370. Below that, the second support is around 22,166, and third support is around 22,037 mark. These are the spot levels. On the upside, the first resistance is around 22,588. Above that, the second resistance is around 22,710, and third resistance is around 22,855. So these are the crucial supports and resistance level in Nifty for the next week. Traders should watch out this level, wait for some pullback, and then try to again build long positions for a positional view. And again, I would like to say or reiterate that next week is a truncated week, so one need to be cautious while going long. Do not, or I would suggest, do not go and buy at particular levels. If there is a correction or a pullback or a profit booking, that should be used, or that could be the ideal way to buy at the lower levels for a positional swing on the upside. Now, friends, let us discuss the derivative data of Bank Nifty calls. You will see on the screen. In Bank Nifty calls, the action was seen in 22,600 calls, 22,700, 22,800, 22,900 calls also. Now here you can see the option premiums are slightly positive to flat. Implied volatility is in comfort zone. It is between 10.19 to 10.39. This is the Saturday's data. So definitely we cannot purely judge a full data, but we will just look out for the previous OI, because Saturday's OI is, yes, increasing, but not in that quantum during the normal market hours. Definitely there has been a rise in the open interest, rise in the option premium on immediate basis 22,600. And I would like to say again that the immediate resistance was 22,588. So we will take it a round figure that once Nifty settles about 22,600 mark, we can see Nifty rallying towards 22,900, where the major part of the open interest and volume is concentrated. So definitely the data seems to be positive, but as I said, a cool off cannot be ruled out. Now, friends, let us discuss the Nifty put data. Now, in Bank Nifty puts, in Nifty puts, you can clearly see there has been a drop in the option premium, though that particular drop is not that significant on Saturday's trading session. Yes, but on Friday it was significant. There has been a rise in the open interest. The action was seen in 22,400 puts, 22,300 puts, 22,200, and 22,100 puts. Now there has been a rise in the open interest. Yes, the rise in the open interest on Saturday is not that much higher or significant compared to the normal days, but we can consider it. But the previous open interest is significantly or very strongly higher, and smart money is already into writing the out of the money or at the money puts. That means the smart money is bullish on the markets at this juncture, and which will push the market on the upside. So definitely one needs to be bullish, but one should wait for a pullback also. Now, on immediate basis, 22,400 could act as an immediate support. If that is taken out or broken down or broken or closes below 22,400 in Nifty, will see some further drip down of the Nifty towards the level of 22,300, or between 22,300 to 22,200 or 250 mark, and that should be the ideal level to buy on dips. So one should wait for some cool off before buying, before going long in the Nifty or before going long in the index for positional point of view. Now, friends, let us go to the Bank Nifty daily charts. In the Bank Nifty daily charts, we will see the Bank Nifty daily spot charts. Now, this is the Bank Nifty daily charts. You can clearly see that Bank Nifty has also been moving in this particular rising channel smartly since January 2024, and multiple times it has taken support. It has, and recently also, as we have said, that it has taken support from by touching its 100-day moving average, and it is well above those particular level. So definitely the chart seems to be positive. This is the daily charts. You can see here RSI is also positive. So this is also again another positive indication. Let us go to the weekly charts. Again, you can see the weekly charts are also positive. It has already pierced almost 50% in the previous week's downfall. So that is also one of a kind move, or it is also, we can consider it as a bullish sign. But as I said, next week is a truncated week. A cool off cannot be ruled out from these levels. So overall chart seems to be positive. Indicators are also positive. So maybe again, I would like to say that buy on dips should be the strategy for the next week. Now, friends, let us discuss the important supports and resistance level in Bank Nifty. The first support in the Bank Nifty is placed around 47,941. Below that, the second support is around 47,620. And third support is around 47,150. On the upside, the first resistance is around 48,660. Above that, the second resistance is around 49,023, and third resistance is around 49,252. These are the important supports and resistance level in Bank Nifty for the next week. Traders should watch out this level closely, wait for some pullback, wait for market to get stable, consolidate, make some days, and after that, if we see any kind of impulsive wave, one should go long uh, from the positional perspective. Now, again, I would like to say, looking at this particular old data, traders should again uh, apply first half an hour to 45 minutes range breakout in Nifty and Bank Nifty. One should mark highs and lows of first half an hour or 45 minutes, whichever is comfortable to individual traders. Mark those highs and lows, and if Nifty or Bank Nifty breaks highs, go long for intraday trades. If it breaks low, then one should go short for intraday trades only. But as I said, the overall trends remains to be positive. So positionally, I feel markets are poised to uh, uh, give an upside rally from these levels. Now, friends, let us discuss the derivative data of Bank Nifty calls. In Bank Nifty calls, the action was seen in 48,500 calls, 49,000 and 49,500 calls. Now, here you can see the option premiums are very flat. Implied volatility is in comfort zone between 10.64 and 12.66. There has been a rise in the open interest, rise in the volumes. So, on immediate basis, uh, 48,500 could act as an immediate resistance in Bank Nifty. Once that is taken out decisively, and if Bank Nifty manages to close above those levels, then there are chances that Bank Nifty might rally towards 49,000 on immediate basis, maybe in next week, or above that. Then in couple of trading sessions, it has potential to test the levels of 49,500 on mark. So overall, data seems to be positive. There is no writing seen on Saturday's trading session. So at least at this, looking at this data, the data is positive. Now, friends, let us discuss the Bank Nifty put data. In Bank Nifty put, you can clearly see there has been a drop in the option premium. There has been a rise in the open interest, and the action was seen in 48,000 puts, 47,500 puts, and 47,000 puts. The implied volatility is slightly higher. It is between 15.54 and 17.46. So there are chances that further smart trader might start writing puts because the IVs are high. So if that happens on Tuesday, then we might see Bank Nifty rallying or might rally towards upward zone. But as I said, looking at the truncated week, a cool off cannot be ruled out, but that should be used as a buying opportunity. So overall charts and derivative data of both the indices seems to be positive. Any dips should be used as a buying opportunity for next week. Now, friends, let us come to the final segment of our show, which is positional call. I've identified one stock. The name of the stock is Granules India. Let me take you to the daily charts of Granules India, and we'll try to figure out what is the trend, and what could stock perform, or how could stock perform in the coming weeks or months. Now you can clearly see the stock has been moving in a downward falling wedge. Stock has taken a very strong support near its 200-day moving average, and that is a very positive sign. RSI is also positive. You can see volume, price, and indicator. Both three are coming in line for a well-deserved rally from these levels. Currently, the stock has closed around 406 mark. The stock is on the verge of a breakout of the downward falling wedge. So definitely, short-term investors, positional investors, long-term investors, swing traders can buy Granules India in the range of 406, and on corrections to maybe 398 for an upside target of 445 to 450 in short to medium term. Short to medium term, maybe for next 2 to 3 months. But definitely the stock is looking very good at this juncture, and stock has potential to give a decent rally in the coming months. So friends, thank you very much for watching the show. Any suggestion you can give in the comment box, and have a nice trading week. Thank you.